Hey folks, Dan Frio here, the rate update. Today is May 10th, 2021. What happened with rates today? We started out great and then all of a sudden, poof. So don't go away, I'll show you what happened. Okay, there's no rhyme or reason what happened today, honestly, other than the cyber attack on the oil well. And I don't even know if that's what actually happened with the MBS market. But let's go over what happened with rates today, and then I'll show you right when everything kind of went bad. So today we ended up the minus 16. So let me explain to you guys what that means. Minus 16 is minus 16.30 seconds on the MBS chart. And when the price goes down like it did, that means you're paying less for a bond. Okay, the mortgage-backed security bond. That is the biggest bond or the bond out there that trades on Wall Street. You might have it in one of your investments. That is the biggest component of mortgage rates. Okay, so it's a bond plus what we call loan level price adjustments plus profit margins. That basically equals your mortgage rate. Okay, so that's why we follow the MBS market meticulously. Today it's down 30 seconds. So that means rates went up. So let's figure out how much they went up and basically let's see if we could figure out why. Okay, so it was down 16, and let's throw in some technicals because this is what I follow on a daily basis. I follow this to kind of predict, what should tomorrow bring and the next week or so. So you follow the trends here, okay, and I'll show you the trends here in a second. But one of the biggest things that you follow is what's coming out in the market is for news or the economy or just the news outlets, and that might throw a kind of a curveball into the markets. You see Monday, nothing. And I'm going to show you here in a second, we had a huge reversal midday. Tomorrow, basically, this isn't any news that should affect the market. Jolt means that's a study of how many job openings there is, and then the 3-year Treasury auction is at noon. The 3-year Treasury auction usually doesn't affect the MBS markets. Then on Wednesday, we have the CPI coming out, all those indices for year over year and month over month in the 10-year Treasury auction. And then on Thursday, we have continued jobless claim, the PPI. So basically, I'll just put this in a nutshell. All the data coming out this week is basically going to give us an inflation watch. Okay, so here's my expectations on what's going on with the inflation in the inflation area. And this is going to play, it's not playing a role right now. It did a couple months ago and it is going to in a couple months, but inflation's going to ramp up and it's going to be pretty hot throughout the end of the year. I'm expecting it to get to the 3s or maybe even hit 4%. But once everybody gets back to work and the extended unemployment benefits stop, we're going to get to normalcy the end of the year and the first quarter of 2022. I think everything will reverse back at that point, back to normal levels. So the Fed already says they're not going to do anything. They're going to let it run hot and they're going to see what happens. And I think that's what's going to happen with all the studies that I'm doing. So basically on that, let's see again what happened intraday, and I'll show you where the reversal took place, and then we'll get into rates. So you can see the market opened up and we were up at like 20 basis points at one point, and then it just sold off. And there was a huge sell-off right here around 315. We ended the day on a down note. That's not good. Hopefully that doesn't carry into tomorrow. But the only thing I can figure out here is there was a cyber attack on the oil refinery places or pipelines that are out there, and that caused a hiccup in the market. The Dow was up 200 and some points at one point and then ended down. So it went up from 200 to it closed at minus 40. So that's a big reversal there. So that's what's going on in the markets. Again, there was no rhyme or reason for it today. Tomorrow we should see some flat numbers, and then Wednesday, we'll probably see some volatility in the market. But what happened to rates? Well, this adjustment throughout the middle of the day right here, about 315, that hasn't been baked into these numbers yet. So as of before that news came in, we had the 30-year conforming rates at 3.10. It's actually three basis points lower than where we were on Friday. So I put this chart out every day. It gives you 30-year rates on the conforming loans, jumbo, FHA, and VA. Okay, here's where the rates are. This is a breakdown of lenders, mortgage lenders all over the country. We take their averages and divide it by how many people get surveyed. And that's what comes up with this number. This number in reality trades or goes in eighths. So this rate would technically be 3.125. Okay, I know I'm all over the board today. I'm trying to be fast because everybody's like, Dan, get to the point. Okay, so let's get there. So these are where the rates are today. So your rate should be fairly close to this if you're getting a mortgage. If it's a lot higher, let me know. If it's a lot lower, be skeptical. Here's the skepticism that I have. Right now, I'm getting loan estimates from people, and that's what I'll ask you to do. If you have a mortgage or you're getting a mortgage quote right now, you're looking to build, buy, refinance, do anything with a mortgage, send me a copy of your loan estimate. By law, as a lender, they have to give that to you within 3 days of pulling your credit. Send it to me. I had one today. The person was like, the rate's fantastic, and I'm really not paying any points. Well, when I broke it down, they were paying $5,700 in lender fees. Now, what the lender did is they put, instead of putting in discount points or points, they put it as a lender fee, like a processing fee. So they had a processing fee, an underwriting fee, an admin fee, another fee for something, a something loan fee. It didn't make any sense, but it totaled between $5,700 and $5,900. That equated out to 2% of the loan amount. So basically they're paying 2 points on that loan, but it was scrubbed into the loan in a different fashion. So if you in the process right now, please send me a copy of your loan estimate. I'll give you that information at the end. Again, if you're building, buying, refinancing, doing anything with a mortgage, or you're in a forbearance, I'm surprised more and more people aren't reaching out to us that are in a forbearance, because there's over 1.8 million people in forbearances. And the biggest complaint with the CFPB is basically the police officers in the mortgage industry is people don't know what's going on with their forbearance. They're in it and they don't know what's going to happen once it ends. Please don't put yourself in that position. Okay, don't be in that position. All right. So if if you already have a loan quote, please send it to me. Let me give you a counter offer. If you're doing anything, you're looking to buy a house or refinance, please go to our website, and I'm going to show you that here in a second, and apply and let us help advise you. We have loans from conforming, FHA, VA, USDA, reverse mortgages, jumbo mortgages, interest-only mortgages, investor loans. We have, if it's a residential loan, we have it. Okay. So let's get back to this. So these are the rates. 1 day delta, 7-day delta, and a 4-week delta. Delta means change. So basically what this means is when there's a 3 in there with some parameters around it, that means it's down. So it's down 3 basis points. What is basis points? Basically 3 basis points would equate out to, in math or numeric numbers, 0.03. Okay, so basically we're down 0.03 across the board from Friday. So there's really no adjustments there. On the 7-day delta, we're getting there. But again, remember I said they trade in eighths, 0.125. So things aren't really going to change in the rate sphere until we hit a 0.125 variance here. So in here we're 0.7 or 0.07, 0.07, 0.06, 0.06. So there's really nothing in the last week that's really changed. Now we get to a 1 month delta or 1 month change. You're looking at about 0.125 to 0.2 across the board on where they are lower. So we're in a nice trajectory of rates coming down, except for that phenomenon today that basically dipped. So let's go over to the charts on what's happening in the charts. So we follow these, and we follow a couple things here. We go over the technicals or the economics calendar, and there's really nothing here until Wednesday that should affect things. So then we go to the technicals or the charting. We follow all these lines. These lines represent, like, for example, right here, this line and this line, they're called what's called Fibonacci levels. And these create a ceiling, a short-term ceiling, and a short-term floor on where things trade or where the numbers are. So what happens is the numbers should trade within this range, and if it breaks out of this range, we'll create new technicals. So now when we're looking at the new technicals, we broke over this Fibonacci level, so now that creates a short-term floor. So now what? Okay, so now these other lines come into play. This is a 25-day, a 50-day, and a 100-day moving average. Well, we're already above the 50-day and the 25-day, so now the 100-day moving average comes into play as the new ceiling. So now, right now, we should be trading in this range right here. So we're right in the middle of that range, so there really shouldn't be anything that changes on rates for the next couple days. Again, Wednesday, we're going to see some economic numbers come out in regards to inflation. That could play havoc on the markets. It might. Eventually, the inflation fears are going to spook the markets. But right now, with the Fed doing what they're doing, is they're doing everything they can to calm the markets. So I'm expecting us to trade right in this range. So we should be right where the numbers are right now. We should be there for the at least through the middle of the week. Okay. So again, if you're in the process of getting a mortgage, or you need assistance, or you're just like, I don't know what to do, here's what I ask you to do. Please, first of all, give me a thumbs up, subscribe down below, hit the bell so every time I post a video, you get an alert. Let's try to hit 200 subscriptions today. Please leave comments down below. What I need feedback from you guys on where I can help. It might not help you, but if you could say, hey, Dan, here, this would be an interesting topic, or this is an area where people I think are really confused, let me know. I'll be more than happy to do a video on that. So otherwise, what I ask is check out our main YouTube channel. And that is the rate update with Dan Frio. There's over 800 videos. We have over 13,000 subscribers. We're getting about 50 now, right now, about 50 new subscribers a day. So thanks to you guys for that. But my website is therateupdate.com. The easiest way to apply, click this button right here. You'll be able to do it on your mobile. You'll be able to do it on your desktop, and you can follow your loan from start to finish. Or give us a call. The best way to get us is our 800 number. It's 844-775-LOAN. That's 844-775-5626, or schedule a calendar meeting with us. So you can click from a 15, 30, and 60-minute consultation. You click it, it'll launch open our calendar. It'll give you all the days we have openings. You click that day, it'll give you all the times that we have openings. You'll get an alert, it'll log right into your calendar, and then we'll get in touch with you either by Skype, Zoom, or by phone. That is the best way to get us. And that is it for today, guys. I hope you find value in the channel. If you do, please subscribe, give us a thumbs up, and I look forward to you coming back tomorrow. God bless.